Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, January 2nd, the year 2019. Let's talk trading. I hope you had a happy and safe new year. Opens, highs, and lows. Opens. Once an open happens, that's it. That line never moves. That value doesn't change. That was the open price, and that's all there is to it. Highs and lows, depending on the time frame. After that time frame ends, those high and low lines, they don't move. And that's why I like them so much. Money and risk management. Okay, this year, not a resolution, but a command. You will make sure your risk management is in place on each and every trade. So let's take a look at the month so far. And you can see here, close, open, we're down 132 pips. Now, once again, let's look at this. There's last month's low, last month's close. You can see price entered and exited the wick zone on both sides. The yearly open, right here, price went up and then came down. I mean, we can change the time frame if you really want to see what happened. But there you have it. Right there. Pretty simple to see. And what we're saying is now we're going to look at these on the multimeter. We'll look at these last three bars. And we will only trade when these three bars are the same color. So if it's red, we'll only trade when it's, red. Because when we looked and analyzed those yearly charts from last year, you saw the moves off of the yearly open. For the week, we filled the gap. Once again, looking at the wick zone, you can see here we broke out of that wick zone, and right now there's 149 pips. So using these lines that don't move and just trading candle color as it crosses, very powerful, very profitable. You don't have to guess about anything. All you have to do is take the trade and employ your money management. I mean, we can go back to this chart. Had you taken this short here, you can see here the wick zone was telling you when to exit that trade. But worst case scenario, if you applied your risk management, you would have either been stopped out somewhere between here and here, if that's where your risk management was, or maybe you might not have stopped out here, so you would have still been in that trade. And if you waited to this time to take the trade, you can see your risk was never threatened. Your stop loss was never threatened. So once again, the same is true here. Now, we're looking at the highs, the opens, and the lows. You see, the high for the week was here. The low for the week was right here. And here's the weekly open. Remember, the week started before the month. So here, you can see right here we had a cross of the low of the week, which was right about the open. So once again, taking that trade proved to be profitable. And so far for the year, this is the yearly open, you can see where price is right now, open minus low, and high minus open. Those were all potential profits taking those trades. And so we'll just keep this in mind as we go throughout this year, 2019, and we'll just wait and see just how big these numbers grow, taking these simple trades. Now, I didn't put this screen up yesterday, but I took the old TRO 2016 plot by date, and I made a slight modification to it. I put in where you could just have the high and low colors as opposed to each one of these, so you can see the highs and you can see the lows for the first day of each and every month. And you can see what price did throughout the year based on those levels. So remember, there are wick zones involved here because the high would be the upper wick zone. So you can see here price came back down through, and then the low for this would be the lower wick zone at exit. And we have the 3-level ZZ indicator on there just because it's kind of fun to watch that indicator. But you can see here, price was just dropping through these lows. It supported a couple of times and finally broke through. And once again, you can see the distance made trading off these levels. These are, let's say I need to change this back to the euro yen. Now I also decided to look at just the first day of the month open. And you can see how far prices moved off of these levels. And once again, you can see these open crosses. These are all opens. Just now, what I'm thinking about is possibly just every month we'll just update it. So we'll keep the 12 months just as a moving forward. So we can see if price respects any of those previous levels. But this is, once again, this is very simple stuff. Nothing, no formulas. We're just using the open, high, and low for the dates. And once again, you can see what happened with this inside bar trade one session ago, taking that exit resulted in about 214 pips right now. And you may have noticed I've added and modified the dashboard to show if prices above, below, or still within the inside bar, so you know if you have a trade opportunity or not. So the ones highlight that the current bar is an inside bar. Or, I'm sorry, the previous bar was. But you can see here, it's, you missed that boat. But that was a nice breakout to the downside there. And you'll recognize this chart, but normally we have it on the daily, and you can see the ranges are just off the hook. More over 100 than below 100. With the new beast, the pound New Zealand, clocking in at 375. Another we're looking at the holos, the highest open for the week, the highest daily open for the month, the highest hourly open for the year, and also ditto for the lowest. So once again, you can see crossing down on those highest opens. Once again, a very nice trading setup. The buy zone, daily open, it took out the pivot, then came back through. Once again, maybe you took this short, maybe you did, you stayed in the trade, you got stopped out, you took the buy. Once again, here, if you took that buy, this should have told you to take a small profit. Here you take that short, and it paid off big time. Rat zone, we'll still look at the rat zone. I've added some of those new charts, just looking at different opens, different highs and lows, but that doesn't mean I'm throwing out the other profitable methods, because when these opportunities come up, it's time to take them. Some people like the rat zone, some people don't. So there's usually something here for each trader, each type of trader. Maybe you're more long-term trader. And so some of those earlier charts, you can almost set and forget. Just let price move to your level, enter the trade, your stop loss and TP could already be in place, and you just let the market do its thing, because it's going to do its thing anyway. So you just hopefully you take advantage of it. And you can see here, price action, 3 ball, green at the line. That was good for 10 pips. And the wick zones, this is the daily, but we're also looking at the weekly and the monthly, because as said, it proves to be profitable over and over and over again. And just because I like the open, high, and low, we're going to keep this. This is almost similar to the other chart. It's just a different view. Tick chart, you can see there was some buying happening. And the Einstein line, once again, showing that you can start at any time. You can put up a couple of horizontal lines. Price is going to range. It has to range away from the price you start at. So if you can't get there at the daily open, it's the open when you start. This is your open. And you can see here, price already ranged, giving up about 10 pips or so if you took them. So that's pretty much it. Once again, we're just going to focus on the open, the high and the low, taking trades, using those as biases. No reason to be long below the open or short above, especially until it has ranged. Meaning, if say it has a average daily range, or the frequency distribution, it's 70% of the time, it's say 80 or more pips, then you don't want to look for a reversal until it hits that point. Might bring up the old ATR lines chart, because that's also something that I like to trade off of, because there's so many ways to trade. And that just goes to show it's not what you trade, it's how you trade it. So as 2019 starts off, let's start off and drain the banks.